Gary Gensler, you're fired. Today we examine if the Trump trade has legs, and levels to which the invisible hand may drive price lower before the underlying trend resumes price discovery in a parabolic ascent. Let's discuss. If you are new to the channel, our daily updates are short format summaries of our market perspectives and trading strategies. We are a team of investment professionals leveraging our careers in traditional finance as traders, market makers, and portfolio managers for top-tier institutions, having transitioned to proprietary traders of digital assets. We have developed a methodology combining qualitative and quantitative factors, merging a multitude of theoretical constructs. Our approach translates how the pricing mechanism is influenced by market maker predatory tactics and trading algorithms with a focus on market structure, liquidity, volatility, and time-price volume relationships. Please note, our content is not investment advice, or is this an educational channel. It is intended for entertainment purposes only. If you suffer from analysis paralysis and prefer short-format market perspectives and rationale for our trade setups, stay tuned and enjoy. The decisive US election and the sweep in the Senate and House revealed the market's view on implications of the expected shift to a more laissez-faire oriented regime of lower taxes and less regulation. Bitcoin price action was tenacious with a near 10% impulse in one session and has yet to show any significant sign of weakness overnight. Price is currently consolidating under resistance, although technically, the only resistance is from profit-taking as seasoned liquidity has been sanitized with Bitcoin now hovering well above the previous all-time high. From a technical standpoint, price broke through the previous all-time high and in TA textbook fashion, flipped resistance to support and launched into price discovery with escape velocity. With the event risk now behind us, the market again will shift focus back to fundamentals and technicals, while probability distributions correspondingly normalize. This has already been evidenced in volatility markets, with the term structure of implied volatility re-steepening from pre-election inversion, as implied volatility in short expiries imploded following the election results, symptomatic of the decisive landslide Trump victory. Optimism and strong sentiment are reflected by the crypto greed and fear index incrementally higher in greed, yet on the cusp of extreme greed. The index's sentiment algo reflects social media brewing with optimism and exuberance with euphoric Bitcoin price projections. Looking to more objective indications in volatility markets, the call-put skew has widened in all expiries, as demand for speculative calls exceeds that of buyers of protection via puts. Also indicative is futures open interest at new all-time highs and a positive funding rate for perpetual futures. Supply and demand technicals, needless to say, are supportive, evidenced by net positive ETF inflows. Market technicals are painting bullish market structure both locally and long-term. Our model's interpretation of market structure, liquidity, and time-price volume metrics projects probable reaction levels for a corrective retrace at 72.8 thousand. A breach of 72.6 thousand will likely result in high-velocity move to 71.4 thousand. Our invalidation level to a near-term corrective price action and resumption of trend higher is 70,000, being a high technical confluence zone and key psychological level. To the upside, our model projects 81.5 thousand by January month end and peak of 145,000 by October 2025, to which we project as the top of Bitcoin's current cycle. Looking forward to potential catalysts for the trajectory of price, today we have the FOMC meeting in the US, which, although a 25 basis point cut is a near certainty, the statement and press conference may have some nuggets to which participants can adjust their expectations on the path of rates and the probability of a soft versus hard landing in the economy. We expect Powell's rhetoric to be more of the same, emphasizing their data-dependent reaction function. Regardless of the outcome of today's meeting, we view looser US monetary policy in the global backdrop of increasing money supply, creating supportive liquidity conditions going into 2025. In terms of strategy, we reiterate our long bias, reflecting our model's aforementioned upside time-price trajectories. As price inevitably follows a non-linear ascent, we will monitor for indications of absorption at the aforementioned downside reaction levels to potentially increase our long exposure. In volatility markets, as the term structure has begun to normalize subsequent to event risk from the US election, volatility risk premium is currently positive, albeit thin, and the term structure is flat, from 1 month to 1 year expiries. Thus, we will again seek to harvest volatility premia and profit from potential mean reversion via short option structures in 1 to 3 months expiries. As always, do your own research and analysis. Be safe, and good luck in trading.